Candlesticks versus order flow. Which one is better for technical analysis, and what information does each one provide? This is a topic that a lot of people talk about. Depending on who you talk to, a lot of retail traders lean towards the plain candlestick side of things, where the more experienced institutional traders lean more heavily to order flow. I will tell you, when I first started trading, what you see on your screen is exactly what I use for technical analysis, plain candlestick charts. I had moving averages, I had indicators, I had all kinds of stuff, Bollinger Bands, RSI, Stochastic, MACD, all of the stuff that retail traders rely on. And I want to take a dive into which one is the better form or better platform to use for technical analysis. When I first started, this is all I did, and then became more seasoned. I was fortunate enough to have a mentor, and I was able to see the other side, the more experienced charts, which is order flow, and what order flow provides versus what plain candlesticks provide. So let's take a deep dive to each one, and let's talk about each one, plain candlesticks and order flow, and let's talk about what information each one provides. Right now, let's just start with order flow. Oh, sorry, let's start with candlesticks. Plain candlesticks is what you see in front of you. And let's talk about what information a plain candlestick provide. I want to start on the left chart. This is a daily rotation, so each candle is worth a day. On the right chart is a 30 rotation, so each candle represents 30 minutes of a day. So let's start with the left chart and let's talk about what information does a plain candlestick provide. And I want to focus on this green candle. We can do any candle, but just for the sake of the video, let's talk about this green candle right here. Right there. Actually, let me do a better arrow right there. All right, let's talk about that green candlestick. And what information does that candlestick, again, this is a daily rotation, what is it providing you? Now, I will tell you, plain candlesticks focus solely on price, whether it's the candle itself, like we're talking about here, where it provides the open, the close, the high, and the low. So in this candle, the open was 241.49. The high of this candle, 244.98. The low of the candle, 241.39. And then the close was 242.39. That's all centered on price, right? So plain candlesticks really only provide information regarding price. It's all centered around price. Even the indicators, the moving averages, the stochastics, the RSIs, the MACDs, they're all centered around price, right? So you can even argue, and a lot of retail traders do this, price levels, right? So here's a price level where on this day, November 11th, price came all the way up to roughly, let's say 242.36 before sellers came in and dropped it. It came back again November 25th, had a little bit of bump above it, but eventually sold down below it. And then it came again on the 27th, the 29th, December 2nd, and then it finally fell. So these are price levels. Again, price levels are only focused solely on price. Plain candlesticks, that's all you're getting is solely focusing on the price or price levels or the price of a candle, whether it opened, closed, the higher it went, the lower it went. It all focused on this right axle here, which is all price. That's all that a plain candlestick gives you. And it doesn't matter which rotation you use. You can use a daily, as you see here. This is all daily candles. You can use a 30, 4 hour, 1 hour, 1 minute, it does not matter. It all focuses on price, no matter what rotation you use. That's the only piece of information that a plain candlestick gives you. It's very misleading, right? You can even say here, again, let's remove this price level. And again, we're focusing on this green candle here. In this, because it's green, it would make you think that the buyers were in control that day, right? There were more buyers than sellers simply because the close uh it closed higher than when it opened, right? So in this day it closed 242.39 and it opened 241.49. So it definitely closed higher than the date or the time or price that it opened. So it makes you think that all right, there were more buyers that day in that candle, so buyers were in control. And that's actually not true. Again, plain candlesticks only focus on price. Order flow, which we're going to talk about next, gives you not only price, but it gives you two other crucial pieces of information that would help you analyze whether the buyers are truly in control or sellers are in control that day. Again, you wouldn't know that based off this plain candlestick because it only tells you about price, right? Structure is another piece of information that the market gives you if you look at the plain candlestick, right? You see high, swing low, swing high, back to a swing low, and this is to be determined if it's going to be a swing low back down. Right now, it's shaping up to be. But that's another piece of information that it gives you. But it still only focuses on price. Even market structure focuses on the price. Swing high, roughly 242.08. The swing low, roughly 226.29. Back to a swing high, 244.71 roughly, all the way down to the swing low, 218.93 roughly. Back to a swing high, roughly 225.62. All of these swings, the market structure, the candle, the moving averages, even the volume below, that's volume of the day and not of price. MACD, stochastic, all of these are focusing only on price, right? So that is what candlesticks or plain candlesticks give you versus order flow. Plain candlesticks solely focuses on price. Now, that's not bad. It's not a bad thing. You definitely need to know price. But what you're not getting is value and volume. And you're not getting that in plain candlesticks. Now you are getting volume at the bottom, but that's only of the day or of time, not necessarily of price. And I'll show you the difference once we flip over to the order flow side of things. So just to recap, we're starting with plain candlesticks. The pieces of information that a plain candlestick gives you all focuses on price. It gives you the open, the close, the high, and the low. It also provides price levels. You can say that's a price level. You can even say this is a price level because we swung back up. But and then actually this is a good one because we swung up to it, down, swung back up, swung down, back up. So this has actually provided a resistance and a support. But again, it all focuses on price. Let's swing over to order flow and let's talk about what order flow provides. And I'm also going to throw in something extra, and that is market profile. So what you see on the far right, sorry, the far left, the middle, these are market profiles. I think I'm going to make a video of that later. That's for another topic, but I'm going to go ahead and unsplit that. And I'm going to make it a little easier to see. Right? So we have a split profile and we have a regular size profile. Now, these are 30-minute rotations. This is a weekly profile, and this is a daily profile. But what I really want to focus on is the order flow part of it. Now, again, plain candlesticks provide just price, right? That's all it focuses on. Now that we're flipping over to order flow, Here is here's a, I'm sorry, not a plain candlestick, but here's candlesticks, right? We have a green, we have red, another green high, a green, red, 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 right? So we have candlesticks. But do you see what the difference is with order flow? Not only do we see the candlestick, but we also see volume within the price point, right? So we are providing with order flow, we are providing price. We're focusing on price as well, but we're adding other elements, other pieces of information that are crucial to a decision whether to buy or to sell. We're looking at what's it called? MGI, market market generated information. MGI. What you're seeing is market generated information. Right? This is real buyers and sellers and the volume and the magnitude of which they are buying at certain price points. We still have the price action, right? We still have the axle of price on the right side. We still have the candlesticks, but now we're adding volume and value. Now, value really comes from market profile. And again, that's another topic. But market profile really gives you the volume, just to kind of a little a little piece of what that is. So value here, let's focus on December 26th, the day after Christmas. Right here, that profile. All right, so this is the entire day of December 26th. What you see at the top here of this line and the bottom of this line is value. Anything between value high and value low is considered 70% of the trading day. So this entire day of trading, um, from the top, which is roughly 226.20 to the bottom of 221.25, roughly, was the entire range of the 26. But from 225.78 roughly down to, let's say, 223.75 was 75% of all trades that day. That's value. That's where other participants, buyers and sellers in the market felt that IWM, as we're looking at IWM, that's the auction that I participate in. 75% of this area is where other participants felt that IWM was of value, right? So that's the little sneak peek of value. But I really want to focus on the order flow side of it. Going back to the right chart, we have our candles just like we saw on the plain candlestick chart, but we've added more information. We've added volume, right? If you can see my cursor, volume here and the amount of volume in the candle. We're also seeing time and we're seeing price. And value again comes from TPO, market profile. But on the order flow, we definitely see time. We can see how long time spent or how long other participants spent in these price points. We see where the bigger players came in at these price points with volume, right? And we're seeing the less of volume. We're seeing volume when it's heavy and volume when it's not, where business is being done and when business is not being done. You don't get this from a plain candlestick. And all you see, again, just to recap, plain candlesticks focus solely on price. Open, close, high, low. That's all you get. With the order flow, you get those same information, right? You get the open. If we were to look at this candle here, let's look at this candle right here. Okay. This candle right here, you're still getting those same pieces of information that you would get from a plain candlestick chart. You still get the open, you still get the high, you still get the low, and you get the close. You're still getting that. But here is the additional information that is giving you. It's giving you volume, right? You're seeing market generated information, MGI. You're seeing real buyers or sellers happening at certain price points. You're seeing which price point they are interested in or when they're really coming in. In this case, this is sellers, right? The buyers came in and we're buying the market. And then we get to this 225.42 down to 225.35. And we're starting to see some activity happening here. In this case, this is sellers. We're seeing sellers coming in to say, you know what, IWM, again, this is the auction that I choose that we're in for this example. IWM, I don't think it's value. I think the value is too high, right? I don't think IWM is worth 225.40, right? These are other participants feeling that way. And you know what happens after that? It dropped. But you don't get that from a plain candlestick. You get this only from order flow. You get to see in real time. Again, I know this is printed, so this is after the fact, but in real time when the market is open, you get to see this happening as the market buyers and sellers are auctioning in real time. Volume, I'm sorry, price, as you still see, it's still the price axle on the right side, but we're also adding volume and we're adding time. And again, just a sneak peek of value. Value comes from TPO. Now, again, if we go back to, let's go over to a retail chart. Do you see the difference? Hopefully, you guys are seeing the difference between plain candlestick and order flow. Let's go back to the order flow side. Order flow. You see how you're still getting the candlestick, but now you're adding more information to make a better decision. Because without this information to see where the bigger players are coming in, where the other auction participants are interested in, you're gambling, right? With this, you have information, you have the power of information on your side to make the right decision. With plain candlesticks, let's switch back over to plain candle, you really don't know that a big seller came in. Again, we're focusing on this candle here. You really don't know at which area. I mean, price went all the way up to, what do we say, 244.98. We know, only thing we know that price went up that high, but we don't know where in the 244.98s, maybe the 244.35, 244.10, 243. We don't know where the bigger player came in. All we know is that they did come in and they dropped it down. But if we're looking at the order flow, if we're looking at more institutional tools, we can see, let me make it a little bigger to easier. So we can see that on this, now this is Friday the 25th, but just example of this candle. Again, we're focusing on this candle. We can actually see when the bigger players come in. Now we have more information in our toolbox to make a sound decision, right? And there are other factors that goes along with making this decision. Again, value, looking at the TPO chart. But I just want to point out the differences between a plain candlestick and an order flow chart. In the order flow, you don't have to guess. You can actually see it happening in real time. You can see in this candlestick at 9:45 on Friday the 27th, price came all the way up into here. Again, we still get the price information. Now we're seeing volume, which we don't get in plain candlesticks. There's a bigger player that said, you know what, IWM is too high. I don't think it's worth 225.41. I don't think it's worth 245, or sorry, 225.41 or 225.60 or anything above that. This is too high for me. And other participants agreed. And you know what happened? They all agreed that it was too high and let's drop it down. Now there's going to be an area somewhere below where other participants going to feel like, you know what, I think it's valued right. I think this is worth a buy. I think I can pay for this. It's at a good price. I think I want to buy it. Somewhere at the bottom of here, we're going to see that. We don't know exactly where. Here is the profile of the 27th, and we can see kind of 220.16 roughly, the 220.29 roughly, where we saw other participants say, you know what, open here, 224.34. We had that push up. As I'm moving my cursor on the right, you can see it's moving in the middle. We had that push where other participants said, IWM is too high. I'm not buying no more. Let's sell it, right? And you see that in volume. We pushed it down, and then it came all the way down from the 225.35 area, 230, 225.40, all the way down to 220.37 roughly, where other buyers, now buyers came in and said, you know what, other participants of IWM, because we're in the IWM market or IWM auction, other participants in the auction say, you know what? It was too high in the 224s, but I think it's a good price to buy in the 220s, right? It happened here. You can see that it happened on the 24th, the day before Christmas, Christmas Eve, where price came into the 220.34s or 220.36. And other participants say, you know what? IWM is at a good price. Some people call it a discount. Let's buy up. I think I'm willing to buy up here. And other participants agreed, and it kept going. So hopefully you guys are seeing the difference. And I sprinkled in a little bit of market profile in there, but hopefully you guys are able to see the difference between a plain candlestick and an order flow chart, or a plain candlestick chart versus an order flow chart. Again, I started my career, and this is not to shame or to make you guys feel bad. I started my trading journey using this just like everyone else. I read all of the trading books you can read. I looked at all of the YouTube videos of retail traders that you possibly can look at, and I struggled a lot. I was never consistent. And to be honest with you, I was guessing. This is a lot of guessing, right? And I understand you can make the argument about structure. Price structure is very important, but you need more than just structure. You need more than just price. Price is great. Price gets you partial information, but if you can add value and volume along with other elements in the TPO market profile chart, it would help you understand market movement much more. You will become much consistent than you would be playing candlesticks, because we all have seen the videos, we all have read plain candlesticks, other retail traders. They talk about price, they talk about price levels, they talk about formations, they talk about the break of moving averages. We talk about the overboughts and the oversolds on RSI or MACD. We've all heard it. Again, I followed it at the beginning of my career as well, but I was blessed along the timeline along my journey where I met a mentor, a trading mentor, who oddly enough was focused on playing candlesticks, but what started my journey with consistency actually came from divergences. And I learned much later the importance of divergences, especially when you add other pieces of information like value and volume. And then him introducing me to other people that introduced me to more of the institutional tools like market profile, which I sprinkled in a little bit of that, as well as order flow, allowing me to get more information to make a sound decision on whether I wanted to buy the market that day or sell the market. And it has been a game changer. I no longer use playing candlesticks because it doesn't give me any other than price. It doesn't give me what I really need. Now, again, flipping over to order flow and just focusing on the order flow chart here, I get that same information that I would in a plain candlestick, but so much more. I get two pieces of critical information that help me make a sound decision. So I hope this video helps guys the difference between candlestick charts and order flow charts, what information it provides, and which one is better. You're gonna hear two different sides, I'm sure, depending on who you talk to. I guarantee you the more retail side leans towards the plain candlestick side of it, where the most seasoned, consistent, more institutional hedge fund type of crowd will give you the order flow side of it and will tell you which one is the best. I personally, trading and having experience with both, I 100% believe that order flow, along with market profile, along with reports, along with value, all of that gives me a sound um, peace of mind and more information to make a great decision on whether to buy and to sell. That doesn't mean I'm 100% right. I definitely don't want to put this out there to say just because I use order flow, that means I'm more or I'm 100% right, because you're never going to be 100%, but you will be more consistent. And there's other pieces of information that's involved. We sprinkled a little bit in market profile, but there's also, and I mentioned it just a second ago, there's the reports, right? There's PPI, CPI, jobless, inventory. There's so many other factors that go along with it. You need the bigger picture. And unfortunately, plain candlesticks don't provide the bigger picture, right? They only give you is candlesticks. They give you formation or a structure. They give you price level and price, which again only focuses on price. If you can sprinkle in not only price, but value and volume, you would be light years ahead of everyone else. Just remember that the market is a big auction place of buyers and sellers. And it's not, and if you ever been to an auction, auctions are not solely on price, but they're also about value. Is the price that the auctioneer trying to sell you, let's say a Mustang, they're trying to sell you a Mustang at $100,000. That's the price. But it's up to you as the auction participant to decide, is that Mustang that they're trying to auction off worth, is it valued at 100,000? And that's how auctions work. That's how the market works. If you get enough people to say, yeah, I think that Mustang it's not worth 100,000, you know what's going to happen? That auctioneer has to now lower prices to make it more attractive for buyers. And then you will see, let's say that Mustang goes from 100,000 to 50,000. And then you probably see more auction participants go, you know what? All right, 50,000 for that Mustang. I think that's a good price. Then you'll start to see people buy up. That is the market. It's a big auction of buying and selling based on price and value. All right. So I hope that helps. As always, guys, I hope you find value in my videos. I hope this helps you learn how to trade the market better than before. And if you have any questions, do not hesitate to leave a comment. I'm curious to know what you guys think. I know there's going to be people that look at this video that is going to feel like, you know what, playing candlesticks, I've been successful at it. And if you've been successful at it, God bless. Keep going, keep making your money, keep growing your your brokerage account. I'm sorry, keep growing that. But if you are struggling, like I was when I was using playing candlesticks, consider going over to the market profile side of it. Take a deep dive into it and see if that helps you. It's helped me tremendously. Leave a comment. I want to know what you guys think. I'm curious. I know it may be some back and forth, but I'm curious to hear what you guys think. Until next time, guys, have a great one, a great rest of your weekend, and we'll talk to you guys soon. David with Alexander Trading Investment Group. Peace.